Hello viewers, welcome to my channel. I am Hasham. So now I am going to start the next problem number 5 on consignment accounts. Already till the last video 4 main problems and 8 short problems have completed. If you are regularly watching, now you will be in a position to understand how to make the consignment account, how to make the consignee's account, what are the journal entries, all these things you are fully aware. But if you join right now, you may not be able to understand. So if you want the complete grasp of the subject, make a continuity of watching all the videos, one after the other. Don't join in between and don't leave in between. Otherwise, you will get only half knowledge. If you want the complete perfect knowledge, watch the video from beginning. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel. Select the subject Financial Accounting 2. Select the topic Consignment Accounts. Start watching the first 2 videos on introduction, then first video on short problems. If you watch those videos, definitely you can be able to understand these problems. These are advanced problems. And now I'm going to start the next problem number 5. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. And this problem is entirely new because invoice price. The last 4 problems we have seen, the goods are sent at cost price. There are 2 types of problems. Goods may be sent at cost price or goods may be sent at invoice price. Invoice means some loading is added, some profit is added to the cost price. So see the 5th problem. Usha Limited sent 100 sewing machines on consignment basis to Varun. So Usha Limited is the consignor, Varun is the consignee. The cost of each machine was rupees 300. So 100 into 300, 30,000 is the cost. But the consignor prepared a Proforma invoice at 25% above cost. This is the new point in this problem. The consignor is sending the goods not at cost price but at the invoice price. So how to arrive at invoice price? Add 25% of cost price. Add 25% of cost price. Here in working note you can see here, cost price per unit, per machine is 300. Invoice price is cost price plus 25%. That is 300 rupees is the cost price plus 25% of 300. 25% of 300 is 75. So invoice price will become 375. So invoice price per machine is 375. So loading means difference between invoice price and cost price. Invoice price minus cost price, you will get the loading. So loading per machine is invoice IP minus CP. Invoice price minus cost price. 375 minus 300, 75 rupees is the loading. That is the new point in this problem. The goods are sent by consignor to consignee at invoice price. Now, the company spent 800 rupees on packing. Company means consignor. Consignor spent 800 rupees on packing, direct expenses. While taking delivery of the machines, Varun had spent 950 rupees as freight, octroi and cartage. Varun is the consignee. While taking the delivery of the goods, he has spent 950 rupees on freight, octroi and cartage. This is also a direct expenditure. Direct expenditure incurred by the consignee. And by the end of the year, Varun sold 80 machines at rupees 410 per machine. Actually, number of machines sent by consignor is 100. Out of 100, 80 machines are sold by the consignee. So remaining 20 machines unsold stock. Then he paid 1,100 rupees as go down rent. 1,100 rupees the consignee has spent go down rent. It is indirect. It is not direct. It is indirect. So totally how much expenditure he has spent? 950 rupees he has spent on freight, octroi and cartage. And 1,100 rupees he has spent on go down. Then he was entitled to a commission of 5% on sales. Commission is 5% on sales. Prepare consignment account and Varun's account. So we are required to prepare consignment account and Varun's account in the books of Usha Company. Usha Company is the consignor. So 1 or 2 new points are there. Concentrate more in this problem. The books of Usha Company consignor, ledger accounts, consignment account. So consignment account and Varun's account, consignee account. Right? 2 accounts. First entry, when goods are sent by consignor to consignee, the entry will be consignment account data to goods sent on consignment. Consignment account data to goods sent on consignment. So consignment debit side to goods sent on consignment 37,500. How 37,500? 100 machines are sent. Each machine invoice price is 375. Remember, he is sending the goods not at cost price. He is sending the goods at invoice price. So take IP 375. So 100 into 375, 37,500. That's it. First entry over. The second entry will be expenses paid by the consignor, packing. The consignor has spent some 800 rupees on packing. So entry will be consignment account data to bank. So consignment account debit side to bank, expenses 800 rupees. The third is expenses incurred by the consignee. Consignee is Varun. So expenses incurred by Varun. So consignment account data to Varun's account. Consignment account data to Varun's account. So consignment debit side to Varun's account 2050. Varun's account credit side by consignment expenses 2050. How 2050? 950 plus 1100. 950 is the direct expenses incurred on freight, octroi, cartage, and 1100 rupees are the indirect expenses, rent of the go down. So combined 2050. Next one, commission. Commission is 5% on sales. First of all, we calculate the sales. How many machines are sold? For 80 machines are sold. Out of 100 machines, 80 machines are sold at rupees 410 each. So 410 into 80, you will get 32,800 sale proceed. What is the entry for sales? Varun's account data to consignment. Consignee account data to consignment. So Varun account debit side to consignment, sale 32,800, sale over. Now consignment account credit side by Varun's account, sales 32,800 over. Now next is commission. Commission entry is consignment account data to Varun account. How much commission? 5% on sales. So here you can see commission 5% on sales. 5% of 32,800 comes to 1640. 1640 is the commission. Consignment account data to Varun account. So consignment account debit side to Varun's account, commission 1640. And Varun's account credit side by consignment 1640 over. After commission, the next entry will be stock. Stock on consignment. We have to find out the value of unsold stock. The value of unsold stock at invoice price. Because goods are sent at invoice price, so closing stock should also be calculated at invoice price. So invoice price of 20 machines remaining unsold. So 20 into, what is the invoice price per machine? 375. So 20 into 375, 7,500. Proportionate direct expenses. Now see, direct expenses are spent by the consignor as well as consignee. So consignor has spent packing 800. Consignee has spent on freight octroi 950. So total direct expenses are 1750, 1750. These are the total direct expense. But we require proportionate. Proportionate. This 1750 is the total direct expense incurred on all the machines sent. How many machines sent? 100 machines are sent. So for 100 machines, 1750. How many machines are remaining unsold? 20. For 20 machines, how much? So 20 divided by 100 into 1750, you will get 350. Proportionate direct expense of 350. So add up 350, 7,850 is the value of unsold stock. Value of unsold stock. The entry is consignment stock account data to consignment. Consignment stock account data to consignment. So consignment account credit side by consignment stock account 7,850. I got it here. Right? Now, the new point in this problem. Now, the new point in this problem is goods are sent at invoice price. So, two adjustment entries you have to pass. Two adjustment entries. This is the new point in this problem. Earlier problems, this point was not there. Because earlier 4 problems, the goods were sent at cost price. This is the first problem where goods are sent at invoice price. So, 2 adjustment entries. What are the 2 adjustment entries? First, removing the loading in goods sent on consignment. Second, removing the loading in unsold stock. Write it down there itself. I told you always, when you watch this video, keep a notebook beside you. As soon as I tell something important, write it down. So we have to remove the loading in goods sent and remove the loading in unsold stock. That is the new point. Here I have written completely. The total loading on goods sent on consignment. How many machines have been sent? 100 machines. What is the loading per machine? Here you have calculated loading per machine is 75 rupees. Per machine loading 75. So multiply 100 into 75, 7,500. 7,500 is the total loading on goods sent on consignment. The entry for this is goods sent on consignment account data to consignment. Remember this. Goods sent on consignment account data to consignment. This is the entry for removing the loading in total goods sent on consignment. So consignment account is credited. Consignment account is credited. So credit side by goods sent on consignment loading 7,500. This 7,500. Next, removing the loading in unsold stock. Removing the loading in unsold stock. So how many machines are there in unsold stock? 20 machines are there. Each machine 75. So 1,500 is the loading in unsold stock. The entry for this is consignment account data to consignment stock reserve. To consignment stock reserve. Consignment account is debited. So debit side you write on to consignment stock reserve. To consignment stock reserve loading 1,500. This is the new point in this problem. That's all. Over. I have explained you all the points regarding loading. Right? Now take the total on the credit side. The credit side total is 48,150. From 48,150 deduct all debit items. The balancing figure you are getting 4,660. What is this 4,660? Profit on consignment, because credit side is more, debit side is less. So there is a profit on consignment 4,650. The entry is consignment account data to profit and loss account. So consignment debit side to profit and loss account, balancing figure over. Now Varun's account. Varun's account debit side 32,800. From 32,800 deduct minus 2050 minus 1640. How much is the balance? 29,110. This is the balance carried down. Now consignee is not sending any cash along with account sales. Nothing is received. So this is the balance to be received. This is the balance to be received from the consignee. Not yet received. So by balance carried down, balancing figure to balance brought down 29,110. In this problem, it is asking you to make only two accounts, that is consignment account and Varun's account. That's all. It is not asking you to make goods sent on consignment account or consignment stock account. It is not asking. Only two accounts. That's why I have prepared two accounts. Right? Each and every point I have clearly given here in working notes regarding commission, regarding loading per machine. How much is the loading? Then value of unsold stock. And the additional two entries when goods are sent on invoice price. Whenever goods are sent at invoice price, remember these two entries. First, we have to remove the loading in total goods. Second, remove the loading in unsold stock. So entry, goods sent on consignment account data to consignment. So credit side, consignment account credit side will take total loading. Total loading will take on credit side. And so the loading in unsold stock will take it on the debit side. Consignment stock reserve loading in unsold stock 15. That's all. So this is the end of problem number 5. Hello viewers, so welcome to my channel. I'm Hasham. So now I'm going to start the next problem, problem number 6 on consignment account. Till the last video I have completed 5 main problems and 8 short problems on consignment. So before that, I have explained in the theory regarding the meaning of the term consignment, differences between consignment and sales, what are the documents used in consignment, accounting treatment in the books of Consignor and Consginee. All these things I have explained. Hope my regular viewers have already watched all those videos. Now you are in a position to attempt the problem on consignment. If you have not watched earlier videos, I suggest you to go to the playlist of my channel, select the subject Financial Accounting 2. Select the topic consignment account, watch the earlier videos, be acquainted with the theoretical part. Then only you should watch this video. You can be able to understand completely the topic of consignment. Now I am going to start the next problem, problem number 6. So before start watching this problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout, keep it ready and start watching the problem. Sixth problem. Narendra Dubey of Pune sent 1000 units of stainless steel vessels to Girija Shankar of Hyderabad to be sold on consignment basis. Narendra Dubey is the consignor and Girija Shankar is the consignee. 100 units are sent. The terms were that Girija Shankar would get 5% commission plus 2% del credar commission and be reimbursed for expenses incurred. The agreement, the terms are that Narendra Dubey, consignor, will give consignee 5% normal commission and 2% del credar commission. So totally 7% commission on sales will be paid by consignor to consignor. Now what is this del credar commission? It is the extra commission which is given by consignor to consignee for bearing the risk of bad debts. If there is any bad debts arising on credit sale, then that bad debt loss should be borne by the consignee only, because consignor is giving some extra commission. So if del credar commission is given, then bad debt loss should be borne by the consignee. So in this problem, 2% extra commission is paid called del credar commission. Now if any bad debt arises, it should be borne by Girija Shankar, consignee. Now then the cost of Narendra Dubey was 50 rupees per unit. The cost per unit 50 rupees. How many units are sent? 1000. So 1000 into 50. 50,000 rupees is the value of goods sent by consignor to consignee. He incurred 500 rupees as packing and forwarding charges. These packing forwarding charges are borne by the consignor. On receipt of the consignment, Girija Shankar accepted a bill of 25,000 payable after 3 months. So as soon as the goods are received, Girija Shankar has accepted a bill of rupees 25,000, bill of exchange. That means Narendra Dubey has drawn a bill on Girija Shankar. Girija Shankar accepted the bill and returned the bill. That is an advance. This 25,000 rupees bill is an advance given by the consignee to the consignor. Now, Girija Shankar also paid 1200 as freight and cartage and 800 as rent and insurance. See here. The consignee has paid for 1200 rupees as freight and cartage. This 1200 rupees paid as freight and cartage is a direct expense, whereas 800 rupees are paid as rent and insurance, that is indirect. Actually, total expense of 1200 plus 800, 2000 rupees are the total expenses. Out of total 2000 expenses, 1200 are direct, 800 are indirect. Girija Shankar sold 900 units at rupees 80 per unit. So actually number of units sent 1000. Out of 1000, 900 units are sold by the consignee. Still 100 units are remaining unsold. So we have to find out consignment stock. 100 units are remaining unsold. Then 1/4 of the sales were on credit. One customer failed to pay the amount of 2000 due from him. That means 1/4 of the sales were on credit sales. And out of the credit sales, one customer is there who has defaulted in making a payment of 2000 rupees. 2000 rupees is due from one customer and the consignee is not been able to recover that amount. Bad debts. These 2000 rupees are bad debts. Now who should bear these bad debts? If del credar commission is not paid, then this bad debt should be borne by the consignor. If del credar commission is paid, then this 2000 rupees should be borne by the consignee. So in our problem, del credar commission is paid. So this 2000 rupees bad debts will appear only in the books of consignee, not at all in the books of the consignor. Now Girija Shankar remitted the necessary amount to Narendra Dubey. So whatever is the balance amount, that balance amount is paid by consignee to the consignor. Give necessary ledger accounts in the books of both the parties. Journal entries in the books, not journal entries but ledger accounts. So how many ledger accounts we have to open in the books of the consignor? 4. Consignment account, consignee account. What is the name of the consignee? Girija Shankar. Girija Shankar account. So first account consignment account, second Girija Shankar account, third goods sent on consignment account, last one consignment stock account. These 4 ledger accounts are necessary in the books of the consignor Narendra Dubey. So here, books of Narendra Dubey, he is the consignor, ledger accounts, consignment. First entry, when goods are sent, the first entry is consignment account data to goods sent on consignment. Every time we are repeating, every problem we are repeating, consignment account data to goods sent on consignment. So consignment account debited to goods sent on consignment. How many units? 1000. What is the cost of each unit? 50 rupees. So 50 into 1000, 50,000. So consignment account debited. Goods sent on consignment account credited. Goods sent on consignment, credit side, by consignment 50,000. For every debit, there is a corresponding credit. So here consignment account is debited, goods sent on consignment account is credited. First entry over. Second entry, expenses paid by the consignor for packing and forwarding. Some 500 rupees are spent by Narendra Dubey, consignor. So entry will be consignment account data to bank. Consignment account data to bank. So to bank expenses 500. So I'll tick the amounts. We have completed this 50,000. I am putting a tick here. Here also 50,000. Second, consignment account data to bank 500 rupees. That's all. Now Girija Shankar has received the goods and immediately accepted a bill. Accepted a bill. The entry will be bills receivable account data to Girija Shankar. Bills receivable account data to Girija Shankar. So Girija Shankar should be credited by bills receivable. So here by bills receivable 25,000. Right? Now the consignee has spent 2,000 rupees expenditure. 1,200 rupees direct expenditure, 800 rupees indirect expenditure, total 2,000 rupees are spent by the consignee. So what is the entry? Consignment account data to Girija Shankar. Consignment account data to Girija Shankar 2,000. So consignment account debit side to Girija Shankar 2,000. And Girija Shankar account credit side by consignment expenses 2,000. Over. Now commission. Commission is 2%, 5% plus 2%, 7% on sales. How much are the sales? First of all, sales entry. What is the entry for sales? Entry for sales is consignee account data to consignment account. Consignee is Girija Shankar. So Girija Shankar account data to consignment. So Girija Shankar should be debited to consignment. How many units are sold? 900. At what price? 80 rupees given in the problem. 900 into 80. 72,000. So Girija Shankar is debited to consignment sales 72,000 and consignment account credited by Girija Shankar sales 72,000. So sales entry over. Next entry is commission. Commission. How much commission? Here I have calculated. Commission is equal to 5% plus 2%, 7% of sales. So 7% of 72,000 comes to 5,040. So entry will be consignment account data to Girija Shankar. So normal entry, consignment account data to consignee account. Who is the consignee? Girija Shankar. So consignment account data to Girija Shankar 5,040. So consignment account debit side to Girija Shankar commission 5,040. Girija Shankar credited by consignment commission 5,040. That's all. The next entry will be consignment stock. So here in working note we have to find out the value of the stock. Actually 1,000 units are sent by consignor to consignee and consignee has sold 900 units. So 100 units are remaining unsold. So we have to find out what is the value of the unsold stock. So here I have calculated, see, proportion value of unsold stock. So cost of 100 units unsold, 100 units are unsold. So 100 into 50, the cost per unit is 50. So 100 into 50, 5,000 rupees is the cost. To this we have to add proportionate direct expenses. Proportionate direct expenses. Consignor expenses always will be direct. So consignor has spent packing and forwarding 500. That is direct. Consignee. Consignee may incur direct or may incur indirect. So you have to decide which is direct. Freight and cartage paid by the consignee is direct expenditure. So freight and cartage 1200 rupees given. 800 rupees spent on rent and insurance, that is indirect expenditure. That should not be considered in calculating value of unsold stock. So 800 rupees spent by consignee is indirect, should not be considered. So only 1200. So 500 plus 1200, 1700 rupees are the total direct expenses. But we need proportionate amount. This 1700 rupees total expenditure is incurred on all the units. So how many units are sent by consignor? 1000 units. Consignor has sent 1000. So for 1000 units, 1700. But how many units are remaining unsold? 100. So for 100 units, how much? So 100 divided by 1000 into 1700 is 170. The proportionate direct expenses are 170. Now add up 170, 5000 plus 170, 5170. This is the value of unsold stock. What is the entry? The entry will be consignment stock account data to consignment. Consignment stock account data to consignment. So consignment stock debit side to consignment 5170. And consignment account credit side by consignment stock account 5170. That's it. Over. All the entries completed. Now we'll find out the profit or loss on consignment. Credit side 2 items already ticked. So what is the total? 77,170. From 77,170 deduct minus 50,000, minus 500, minus 2,000, minus 5040. Balancing figure is 19,630. This 19,630 is the profit on consignment because credit side is more. Credit side is more, there is a profit. So entry will be consignment account data to profit and loss account. So I told you in every video, while watching this video, you should keep a notebook beside you. Whenever I tell some entries, whenever I tell some important thing, you must immediately note it down roughly so that you can be able to remember. So entry for profit is consignment account data to profit and loss account. So to profit and loss account, balancing figure profit over. The consignment account completed. Now come to Girija Shankar account, consignee account. Debit side 72,000. From 72,000 deduct minus 25,000, minus 2,000, minus 5040. Balancing figure is 39,960. Now 39,960 is the amount paid by consignee. Last sentence it is given, the remaining amount has been sent by consignee to consignor. The remaining amount how much? 39,960. So 39,960 has been sent by consignee to consignor. So consignor got it. So entry will be bank account data to Girija Shankar. Bank account data to Girija Shankar. So Girija Shankar created by bank, balancing figure. Final amount received 39,960. Account closed. Now goods sent on consignment. The goods sent on consignment should be transferred to trading account. Entry will be goods sent on consignment account data to trading account. So here debit side to trading account 50,000. Account closed, no balance. Now consignment stock account. In consignment stock only debit side 5,170. Credit side we don't have. So we'll take the balancing figure. We'll take the balancing figure. So by balance carried down balancing figure 5,170 and to balance brought down 5,170. See here, this consignment account is closed, consignee account is closed, goods and sent on consignment is closed. But consignment stock is having a balance. Balance stock 5,170. That's all. So these are the ledger accounts in the books of the consignor. Now in this problem, it is also asking you to make the ledger account in the books of consignee also. The books of Girija Shankar, consignee, ledger accounts. So in the books of consignee, normally only one account is needed. The personal account of the consignor. So what is the name of the consignor? Narendra Dubey. So he will open one account, Narendra Dubey account. The consignee will open only one account, Narendra Dubey. He will not open consignment account. Remember this point. Consignment account will be opened only by the consignor. Whereas consignee will account only one account, that is consignor's account, Narendra Dubey account. And one more account we are going to open here, commission account. Right? Now, when he receives the goods, he will not pass an entry. When the consignor pays some expenses, he will not pass entry. At the time of signing, accepting the bill, a bill is drawn by consignor and consignee has accepted the bill, then the entry will be consignor account debtor to bills payable. Consignor account debtor to bills payable, because he is the acceptor. Girija Shankar is the acceptor. Who is the drawer of the bill? Narendra Dubey. Narendra Dubey has drawn a bill of exchange on Girija Shankar. Girija Shankar accepted it. So for Narendra Dubey it is a bills receivable, and for Girija Shankar it is bills payable. It is bills payable. So Narendra Dubey account debtor to bills payable. So debit side to bills payable 25,000. Second entry. He sold the goods. Girija Shankar has sold the goods for 72,000 rupees. So he got the money. So he will debit bank. The bank account debtor to whom it is to be paid? It is to be paid to Narendra Dubey. He got 72,000, but this 72,000 does not belong to Girija Shankar. It is the amount which is to be paid to Narendra Dubey. So entry will be bank or debtors, because sales are done on cash as well as credit. Sales are done on cash as well as credit. So instead of writing only bank, I am writing bank and debtors. Bank and debtors. So entry will be bank and debtors account debtor to Narendra Dubey account. So Narendra Dubey is credited by bank and debtors 72,000. Next entry, expenses. 2,000 rupees are spent by Girija Shankar. So entry will be Narendra Dubey account debtor to bank. He is paying the money from bank. So bank should be credited. For whom he is paying the money? He is paying the money on behalf of Narendra Dubey. So Narendra Dubey account debtor to bank. So debit side to bank expenses 2,000. Now next one is commission. So Girija Shankar has to get 5,040 rupees commission. The entry will be Narendra Dubey account debtor to commission account. Narendra Dubey account debtor to commission account. So Narendra Dubey is debited to commission 5,040, and commission should be credited by Narendra Dubey 5,040. Commission over. Now final amount sent. Final amount sent by Girija Shankar to Narendra Dubey. So entry will be Narendra Dubey account debtor to bank. Narendra Dubey account debtor to bank. To bank 39,960. Balancing figure. Final amount sent. So Narendra Dubey account is closed. Right? Now bad debts. 2,000 rupees are the bad debts loss. Bad debts loss. It will be borne by Girija Shankar, because del creditor commission is paid. The consignor has paid del creditor commission to the consignee. So bad debt losses should be borne by consignee, right? Girija Shankar. So entry will be commission account debtor to bad debts. Write the entry there itself. Commission account debtor to bad debts. So commission debit side to bad debts 2,000. Now remaining commission should be transferred to profit and loss account. The remaining commission is transferred to profit and loss account. Entry will be commission account debtor to profit and loss account. Commission account debtor to profit and loss account. So commission account debit side to profit and loss account, balancing figure 3040. That's all. Completed. So this account is closed. The balance is transferred to P&L account. Here the balance is amount is sent to the consignor. Finished. These are the two accounts in the books of the consignee. One note I have given, since del creditor commission is paid to the consignee, so bad debt loss should be borne by consignee. No effect of bad debts in the books of consignor. No effect. That's all. So this is the end of problem number 6 so far. 6 problems I've completed on consignment, explaining each and every point. So give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. Give your comments on these videos. And lastly, don't forget to subscribe my channel if you have not yet subscribed. Inshallah, we will continue the next problem in the next video.